Today's focus: the number of crypto billionaires has surged by 40%. The Senate is discussing how to tax crypto. What's their plan? ICC has a new leader and introduced an innovative immunity. Just how exciting is this? USDT has issued another billion, yet they're talking about selling shares. Are they short on cash or lacking strong backers? Finally, let's look at the power of Asia in the crypto world. Just how significant is it? Without Asia, can there even be a bull market? It's Thursday, September 25th, and this is the PTV Chinese channel. I'm Beeling and I'm Michael. Let's first look at the most important crypto data from the past 24 hours. Let me tell you, the US is about to make a big move again. The chairman of the Senate Finance Committee, Mike Crapo, has decided to hold a crypto tax hearing on October 1st. Take a look at who's attending. Coin Center, ASK, Coinbase, and the American Institute of Certified Public Accountants are all set to testify. So this is not just for show. Whether the $5 trillion crypto market cap will be subject to taxation depends on this hearing. Here at PTV, the market has been extremely volatile lately. The take-a-buy/sell ratio has consistently been below 1. What does that indicate? Sellers are even more aggressive. Many people, judging from on-chain data, are selling at a loss but still gritting their teeth and dumping. That's why the PTV price keeps tugging back and forth in the $110,000 to $120,000 range. $112,000 has become a crucial support level right at the threshold, so we need to keep a close eye on it. So, what's the good news? Profit takers are exiting, leverage is gradually being unwound, and the pressure on the market is being released bit by bit. The shakeout is like squeezing out bubbles, scary in the short term, but in the long run, it will make Bitcoin's trajectory more stable. Here's today's golden saying you need to remember. Bitcoin is slimming down, shedding excess fat so it can keep moving forward. Now, let's look at the crypto market. It's like a dual-track train. On one side, the wealth effect is surging ahead. On the other, short-term events are hitting the brakes. According to Henry Palmer's report, the global number of crypto millionaires has reached 241,700, up 40%. Among them, 145,100 people have Bitcoin in their wallets worth over $1 million. Going further up, there are 450 whales with at least $100 million in crypto wealth. And among them, 36 are billionaires looking down on the world from the top. So, in the long run, crypto? The stakes are only getting higher. In the short term, things are a bit chilly. Let's look at the CMC Fear and Greed Index. Today, it's only at 41%, down from 51% last week, steadily declining. So right now, investors' mentality has shifted from FOMO to let's wait and see before making a move. As for Bitcoin is hesitating back and forth in the 110,000 to 120,000 range, with profit-taking positions being cleared out and leverage cooling off even further. To put it bluntly, long-term capital is busy reducing their positions, while short-term traders are just sitting on the sidelines, watching the show. The wealth effect is still climbing, but sentiment is on the decline. The crypto market is just waiting for the next big shock. When will it come? Maybe as soon as tomorrow. According to a leak from the economic firm Whalalot, Tether just minted another 1 billion USDT on Ethereum today. You heard that right, $1 billion. CEO Paolo Ardoino immediately came out to clarify, saying that Tether has only just 25%, meaning that Tether still has unlimited potential in the future. It's an extremely profitable company that only comes around once in a century. It sounds like they're giving themselves the label of the Apple of the crypto world, doesn't it? Speaking of which, in fact, Tether is very confident. The total market value of stablecoins worldwide is now, it has already surged to $295 billion. In just 7 days, it increased by more than $5 billion, setting a new record for growth. Among them, USDT alone holds $173.3 billion, which is nearly 60% of the total, firmly in the lead. The most remarkable thing is that when Bitcoin drops, the money doesn't leave. Instead, it flows into stablecoins. It's like changing positions to keep lurking. The money hasn't left, it's just moved to another pool. When the macro environment shifts, the funds accumulated in stablecoins can quickly flow back into mainstream assets like Bitcoin, sparking another independent rally. So Tether's evaporation is actually a routine operation. In fact, it's like giving the market a trailer for the next bull run. Please like and turn on the notification bell. Mao Zedong's tree, inside and out, 3 worlds in a turn. Let's look at the latest news. Today is Thursday, 8 p.m., which is our members-only live stream time. Today, we're going to talk about what Arthur Hayes said in his full speech at the KBW Blockchain Summit in Korea. Has the overall market sentiment really bottomed out? How far are we from the next bull run? All right, for today's news, let's talk about the new chairman of the ICC in the United States, Paul Atkins, who officially took office on April 1st. When he took office, he made bold statements, saying that the US financial markets must embrace blockchain and crypto assets. Unlike his predecessor, Gary Gensler, who kept insisting that tokens are securities and must be strictly regulated and penalized, Atkins' attitude is much more flexible. But is this the right approach? Atkins' stance is that it depends on how you package and sell it. In fact, Atkins even specifically launched something called Project Crypto, which is dedicated to creating customized laws and regulations for digital assets. The goal is to ensure that the US financial markets are fully aligned and don't fall behind.
Paul Atkins stated that the SEC is formulating innovative exemption rules with plans to complete them by the end of the year. He revealed that the SEC has recently approved the nation's first diversified crypto asset ETF, allowing investors to access multiple cryptocurrencies through a single product. This time, unlike previous special case approvals, a universal listing standard is being adopted, laying the institutional foundation for future innovative exemptions. In fact, on September 17th, the SEC officially passed a new universal listing standard, allowing eligible crypto exchange-traded products, ETPs, to be listed on major exchanges more quickly. The new regulation has significantly shortened the approval cycle from 240 days to just 60 to 75 days, which the industry refers to as the Crypto ETF Fast Track. This not only opens the door for ETPs of mainstream assets like Bitcoin and Ethereum, but also provides institutional safeguards for more crypto financial products to enter the compliant market.
So everyone, don't underestimate this innovative exemption. If it ultimately comes to fruition, I'm telling you, this will be a real shot in the arm for the crypto market. In the past few years, US projects have always been under the shadow of regulation, and everyone has been treading carefully. It wasn't until Trump became president of the United States again that the entire attitude toward crypto assets made a 180-degree turn. You have to know, Europe has MiCA, Hong Kong has also issued stablecoin licenses. Aside from MiCA being ahead of the US, all other countries, in fact, when it comes to regulations in Hong Kong, they are all watching the United States. The US regulatory framework sets the tone, and only when the US takes action do other countries dare to slowly try things out. So this round of regulatory easing by the US SEC on crypto assets can be seen as an effort to firmly seize the discourse power and pricing power of the entire crypto market, or even the future of finance. You have to understand, traditional capital isn't afraid of anything except unclear rules. Once the rules are clear, both capital and talent will flood into the US financial market like water released from a dam. So next, the SEC is entering the practical implementation phase, how to uphold the regulatory bottom line without stifling. The innovation of new finance will be the biggest focus of future US regulation. Recently, there's been some explosive news. Tether is planning to sell 3% of its shares, with a price estimated at around $1.5 to $2 billion. If you calculate based on the company's overall valuation and price-to-earnings ratio, 3% of the shares could sell for at least $50 billion. This puts it among the world's top private companies, and it has also set a new fundraising record in the crypto community. Why is it that Tether, with its profitability that makes its peers envious, is now still seeking financing? What does selling 3% of its shares really mean? I think this is not just Tether flexing its muscles, but also making it clear that it wants to use capital to tell a story and attract partners. Not only do I have money, but I also want an even bigger future, greater expansion, and more capital support. Clearly, Tether is aiming to seize the market. This is a declaration of war. What do you think?
Data shows that as of September 24th, USDT's market capitalization surpassed $172 billion, reaching a historic high and occupying more than 60% of the market share. At the same time, Tether CEO Paolo Ardoano recently stated that Tether's profit margin is as high as 99%. The second quarter financial report further shows that Tether's financial documents list reserve assets of $162.5 billion, exceeding its $157.1 billion in liabilities. Since Counterfeits World's former CEO, Howard Lutnick, is now the US Secretary of Commerce, this deal has been interpreted by outsiders as having strategic value and may bring Tether more policy support.
This round of financing is very similar to what Binance did. Didn't Binance sell 5% of its shares to the Saudi Sovereign Wealth Fund at a low price? In other words, on Binance's turf, in Saudi Arabia and Dubai, Binance has strong backing. Now, Tether is offering 3% at a $500 billion valuation. I believe Tether is building connections with Wall Street because what they want is Wall Street capital. If you can become a shareholder of Tether, what are the benefits? You can wash away the stigma of reserve and audit issues and also bring in truly top-tier capital as support. So what are the advantages of this round of financing for Tether? If Wall Street really gets involved, not only can they get money to develop AI and tokenization, but they can also conveniently clear up the negative perceptions around reserves and audits. That's why this round for Tether. To put it bluntly, this round of financing is a very calculated move. Tether is not only after the money, but also aiming to get the green light in the US market. Is 101 times leverage an innovation or just a monopoly? Can Aster really take down Hyperliquid? In India, crypto trading as a side hustle is a necessity. Japan's policies are going all out. Who is truly the crypto king of the Asia Pacific? Just how widespread is Asian power? At this moment, Hyperliquid is the hottest project in the entire DeFi sector. They even launched a stablecoin, USDH, which did $2 million in transactions on its first day. So Hyper's new project probably thought they were set, right? But then Aster on the Binance chain suddenly pulled off an overtaking maneuver on the curve. On the very first day, their perpetual contracts hit a trading volume of $30 billion, completely crushing Hyperliquid's $10 billion. They just dragged them through the mud. Let me tell you, the landscape changed in an instant. DeFi's throne suddenly had a new challenger.
According to Concluse data, Aster's open interest surged from $3.72 million to $1.25 billion. That's a staggering 33,500% increase. DeFi Llama shows its TVL grew by 18. Its TVL increased by 1.96 times in a week, reaching $1.85 billion. Behind this are support from BNB Chain and former BN Labs YZ Labs. Commerce Cap promoted it through CMC launch, with banner ads getting over 400 million impressions and reaching 5 million people.
Hyperliquid should probably take a survive as long as you can approach. They've always been pretty laid back, and now they're even more so. Everyone can see that USDH is clearly backed by US dollars and US Treasury bonds, and after making a profit, they even use it to buy back Hyper. It all looks very stable, right? But the token risk in November was already mentioned for everyone in yesterday's show. Plus, Aster suddenly made a move and immediately pushed them into a corner. In DeFi, the plot can change at any moment. The system's still the same. Look at what Aster's doing, 101 times leverage. This is like a VIP room in a casino. Some make a fortune in 5 seconds, while others get liquidated in 5 seconds and end up back at square one. To put it bluntly, it's not just a competition between platforms, it's also a divergence in the future of DeFi. Do you want to choose a Zen-like stable casino like Hyperliquid or a heart-pounding roller coaster casino like Aster, where 1 second you're on top of the world and the next you're at rock bottom? Safety and excitement are always the market's two irresistible choices, but unfortunately, you can only pick one. Over the past week, I can say I've traveled all over Asia, from Hong Kong to Bangkok to Singapore, and now, when I was in Penang, Malaysia, I shared Channelist data with everyone. And as soon as we laid it out, it became clear that this wave in Asia is truly a showcase of diverse crypto ecosystems. In Indonesia, India, and South Korea, crypto assets have doubled, while in Vietnam, over just a short period, market share has steadily increased by 55%. So the Asian market is maturing at a rapid pace. Don't assume that the ways of playing are all the same. Young people in India treat crypto trading as a side job, sending money from their regular work back home. In Pakistan, stablecoins are seen as a magic tool to fight inflation. South Korea is even more extreme. After the new president took office and new laws were introduced, there's almost no difference between trading crypto and stocks. The whole nation is surfing the wave. In fact, the number of people trading crypto in Korea has already surpassed those trading stocks. So, even though it's all about crypto in the Asia-Pacific region, the ways people play the game are completely different. But one thing is common across Asia-Pacific. Everyone is desperately trying to make money.
According to a report by crypto analytics firm Channelist, in the 12 months up to June this year, the value of Japanese interests increased by 120% year-on-year, and crypto adoption rates have doubled in the Asia-Pacific market. The driving force behind this surge comes from policy relaxation, adjustments to tax regulations, and lower crypto tax rates. Just last month, Japanese regulators also approved the first yen-backed stablecoin, GPYC, breaking down the listing barriers for domestic exchanges.
As you can see, it's truly a flourishing scene now, already showing its enormous potential for the future. In South Korea, trading volume soared by 50% at the start of the year, reaching $59 billion in just half a year. And it's even starting to feel like a new national currency. Australia, Singapore, and Hong Kong are busy working on unified regulations, almost like they're lining up for regulatory rankings. Meanwhile, workers in the Philippines and Vietnam are using it to earn money every day. And in Indonesia, it became a hot tool for coin trading before the new year, with the added benefit of helping to fight inflation. Japan is now the most remarkable case. Previously, taxes were high and policies outdated, but now they've streamlined everything. And with policy support, they've gone from lagging behind to
Trump made a statement at the UN telling Israel not to annex Jordan and the West Bank, which finally eased some of the external tensions. Right now, everyone is inviting recognition of Palestine, and this move is like sprinkling some inactivated powder over the Middle East to calm things down. Vitalik Buterin spoke today, saying that the Fusaka upgrade can solve data availability issues, but security will always be the top priority. In other words, even if Ethereum speeds up, you still need to remember to fasten your seatbelt. Big brother Ma Ji's wealth took the elevator. In 4 months, he turned 42.6 million into just 11.6 million after losing 30 million in 6 days. Truly, it goes up slowly and comes down fast. In crypto market making, GS2 wants to launch a new ETF. First, they're looking at companies with Bitcoin in their treasuries, picking about 10 US listed firms and might add some pipes. Simply put, they're packaging up the companies with the most Bitcoin and selling them to institutions, making it easy for them to get on board. The Australian Treasury has made a big move. If a crypto platform wants to open, it must first pass the AFSL financial license exam. Everything from value custody, settlement, to dispute resolution must be online, or else you'll be kicked out by law.
A good manager wants to tell you about a counterintuitive phenomenon. Some people seem powerful and difficult to deal with, right? But once you actually get to know them, you'll find they're incredibly easy to get along with and trustworthy. Why? Because power isn't a thorn, it's a guide. Dealing with powerful people is incredibly worry-free because they have clear principles, bottom lines, and transparent rules. If they're unhappy, they can just say they disagree and they won't hide behind you. You don't have to guess what they're saying, and they won't play games with you. But there's a type of person who's just really good, and you have to be especially careful. They're the lubricant for the team, the good guys in the room. They seem to be in good spirits everywhere and never complain about any situation. They're very easygoing, but that's just a disguise for their scrutiny mode. You never know their true needs and bottom lines. You have to guess and rely on mistakes when interacting with them, which seems even more tiring. So true good relationships aren't about superficial harmony, but about authenticity and transparency. There are expectations, abilities, and connections. Although the wind is blowing, they're all using reputable brands. If you understand, give a thumbs up. The entire content of today's show is here. All our rights are covered here. We hope you'll join our membership and make the channel more professional. Let's slowly make money together and increase our Bitcoin reserves. See you tomorrow.